Everybody, welcome to Everything Accounting. I'm Alfred Zaglul, your friendly neighborhood CPA, and I'm here to talk to you about incorporating versus having a sole proprietorship, because this is one of the questions that I get all the time. So for those that don't know, a sole proprietorship is basically you have created a business, it's under your personal name, it's 100% owned by you, but essentially it's associated to you as an individual. An incorporation is its own entity. So it's a legal entity in the world and you own that entity. Kind of crazy to say, but that's how it works. So when you're creating a business, it'll fall under one of those categories or partnerships, but we can talk about those later. But really, typically when people start their businesses off, to make it easy for them, they start off as a sole proprietorship. They don't know if the business is going to make money. They don't know if the business is going to grow or what have you. So a lot of the times, you're essentially creating a structure to allow you to sell products or sell your services fairly cheap, right? Because incorporation has its own legal costs. It has its own costs to set up. So a lot of the times people will come to me and say, hey, I have a sole proprietorship right now. Do you think it's worthwhile for me to incorporate? And the one thing that you have to consider is that it's not all about taxes, because that's typically what people come to me for. They're like, hey, I want to save money on my taxes. Should I incorporate? But there's so much more involved in incorporating. There's so much more involved in creating a structure like that. So I'm going to walk you through what it means to be a sole proprietorship, how that impacts your taxes, and what the costs are. I'm also going to walk you through the incorporation process, what I did to incorporate a few of my businesses. There's multiple options, but I'll walk you through the incorporation costs. I'll walk you through the tax impact of that, and why I suggest to some people, yes, incorporate, and some people, no, stay as a sole proprietorship. So let's walk through it together. As a sole proprietorship, you are, like we said, for both sides actually, you have sales, you have costs, you have profits. So whether you're a sole proprietorship, whether you're a corporation, you have that same structure. So you're evaluating your net profits at the end of the day and at the end of the year. Under a sole proprietorship, like I said before, it falls under your personal name. So when you're filing your personal taxes, you have a subsection called the T2125, which is business income. And under that, you lay out, or your tax accountant will lay out all your sales, all your expenses, and it'll lay out your profitability. And then you get taxed as an individual on that income. Now, individuals in Canada get taxed on different brackets. So it's a bracket system in terms of how much you've made, and based on that, there's certain tax impacts. The rates range between about like 20.9% to 50% in BC and Alberta, and that's kind of what you range. Like it really is a factor of how much you made in the year. Now 50% obviously being top tax bracket, we're talking anywhere between profitability of 300,000 to 330 roughly, or anything above. So if you're at that point, then let's talk about incorporating. But as of right now, let's say you started off your business, you're making, say, a clear $100,000 and you're getting taxed on that. Cool, awesome. Now, as a sole proprietorship, the government will assume that every dollar of profit you've put into your pocket. So that's why you get taxed on the whole amount on a personal level, right? Whether you have it in the business account or whether you have it in your personal account, it doesn't matter to the government. They just assume that you hold that money because you're a sole proprietorship. So you're going to get taxed on it full on. So that's one side of it. Now, looking at the incorporation side, the incorporation, like I said at the beginning, is a completely different entity. As a different entity, that means that it has to hold its own bank accounts. It has to hold its own credit cards. It has to hold its own sets of books. And then an incorporation actually gets taxed at a much lower rate. So your tax rate federally is after there's a lot of factors, but there's abatements, there's small business deductions if you make under $500,000 in profit. There's different provincial taxes and all that. So it depends. Me being in Alberta here, you're looking at about 8 to 8.5% tax. And on top of that, in BC, where a lot of my clients are, you're looking at about 11% tax. So it's a big difference between sole proprietorship taxes and incorporation taxes. And that's why a lot of people come to me and be like, hey, I could save a lot of money on incorporating. But when you have an incorporation, it's great that you save that money, but how do you get that money? That's something that people always forget. Now, say the business made $100,000. Now, the business has spent everything. You haven't taken a dime from the business yet, right? You're not an employee of the business. You're not taking management fees. You're not taking dividends or anything like that. So what ends up happening is the business has made $100,000. The business bank account has $100,000. Let's say, like for ease. That $100,000 then has to come into your bank account at some point if you want to spend that for personal use, if you want to go on vacation, or if you want to like buy a car, or you want to pay for your mortgage, or whatever it is that you personally have to spend on just to live a normal life. So you've earned $100,000. That money has to come to you, and then you pay taxes on that. But say you evaluate your life, and this is something I always suggest to my clients, is in evaluating your life, you need $100,000 to feel comfortable. And I'm not saying feeling rich. I'm saying to feel comfortable, you need $100,000 in your pocket. Then it's not really worth it to incorporate, because you're going to just pay the tax on that and pay tax on the business, right? So it's not typically of value to do that. But if you say all you need is 60,000 of the 100,000, then cool. The 60,000 gets treated as either dividend income or employment income based on how you pay yourself out, whether it's an employee or dividends. And you personally will get taxed on the 60,000 based on that structure. And then the rest of the money gets taxed at if you take employment income, it gets taxed at the 40,000 remaining at, say, 11%. Then using that structure, the business then holds on to $40,000. So that, say, next year, you're like, hey, I could use that $40,000. I want a little bit extra. And the business now made $200,000. So it's just, it's all about structuring it so that the business holds some money at the end of the day. If you have to take everything out of it at the end of the year, then it's not worth it, right? Because you end up getting taxed on that. You get taxed on the business side, and you've paid a ton of costs to incorporate. Now, to set up an incorporation too, you have to realize is not cheap. Setting up an incorporation means you either have to go through, when I first started my business, I went through the Government of Canada website and the Government of BC website, and I just filled out the paperwork that they provide, registered my business, submitted it to them, paid the fees, and it ranges between provinces and stuff like that, but you're looking around like $500-600 to do that, but it's a lot of time. Or you can get a lawyer to do it. Now, the lawyer can range, just like any professional, they all have their billable rates. So if you're looking at a lawyer with like a big firm, right? Let's say Deloitte as an example. Like they're the biggest in the world. Awesome. You're paying probably close to $5,000 for an easy incorporation structure, right? But I've also found lawyers that charge about like $1,200. So you'll range between who your lawyer is and what kind of incorporation you're trying to set up. So in doing so, you're going to cost yourself on the get-go anywhere between $1,000 to $5,000 just to create the business, right? Then on top of that, you have annual registration fees. Then we haven't even talked about the accounting costs. And it opens you up to more scrutiny in the eyes of the government, right? And that's annual. You have to file annually.